CBS 8 is working for you to explain why condominium insurance policies are being dropped across San Diego and across California due to wildfire risk. Good evening. Thanks for joining us. I'm Marcella Lee.
I'm Carlo Cicchetto. It's a story we've been following for weeks now. Property management companies usually secure insurance policies for condominium homeowners associations. CBS 8's David Goffredson talked to an expert with a company in Kearny Mesa that helps condo owners with canceled policies get new fire coverage.
Can you put me on speaker?
Yeah, you're on speaker.
Okay.
San Diego insurance expert Grant Mosley works at Utopia Property Management in Kearny Mesa, but he spoke to me from a rooftop in Nashville, Tennessee.
What are you on vacation in Nashville or what? What are you doing there?
My wife and I are here celebrating an anniversary.
Oh, nice. Okay.
Mosley says under California law, insurance companies have to give a 75-day notice of non-renewal before they can drop property insurance. So that should give your condo or homeowners association plenty of time to start looking for replacement policies.
A lot of these homeowners associations have dozens of units and they need tens of millions of dollars in coverage.
As CBS 8 has reported, Farmers Insurance recently dropped policies on at least 4 San Diego condo complexes due to wildfire risk, leaving more than 1,000 homeowners without property insurance. The condo associations will typically turn to an insurance broker to cobble together a replacement policy on the surplus market with a much higher premium for less coverage.
The real concern is how are they going to sell their units when a mortgage company isn't going to lend on a property that's not insured. I don't think homeowners are going to be able to sell them.
While the insurance companies will tell you wildfire mitigation is the solution to the problem of condo complexes being dropped, Mosley says spending money on brush clearing or structure hardening does not guarantee the complex will be reevaluated and renewed.
They have high-risk fire zone models. They could clear it for 5 miles and, put all the fanciest roofs on there and gutter guards and protect the eaves and all that. They're going to decline it anyway. It's really an exercise in futility, unfortunately.
He says the best advice if your condo association is dropped, start looking as soon as possible for other carriers.
It's really a crapshoot on who's going to pick it up. The one thing that's certain about insurance is it's uncertain.
California's safety net state-run insurance plan is called the FAIR Plan. It only covers fire insurance, and as it stands now, the maximums on the FAIR Plan are not high enough to cover most condo complexes.
Well, we certainly want to wish Mr. Mosley and his wife a happy anniversary. Hope they have a nice trip to Nashville there, David. But what is the difference here between the primary insurance carriers and the surplus carriers?
The primary insurance carriers, also called the admitted insurance carriers, have their rate structure highly regulated by the Department of Insurance. The secondary insurance carriers, also called non-admitted insurance carriers, are not regulated, and if they go bankrupt, they are not covered. Your claim may not be covered if that secondary insurance company goes bankrupt. So it's important to do your homework when you're diving into the secondary market.
David Goffredson, you've been all over this, and I'm sure with the way things are going, we're going to have a lot more stories on this exact subject. Reporting live. Thank you so much, David.